285%. That's the amount that the total market index fund has appreciated since the last time we had a major fiscal cliff impasse in 2011. So this is Jeff Bernier with TandemGrowth Financial Advisors, just following up on a blog I wrote recently about, is it time to start worrying about the U.S. government defaulting on its debt? And what I want to encourage you to do is to take the long view, take the long game. You know, we have an election essentially every 2 years. The entire House of Representatives and 1/3 of the Senate turns over every 2 years. And so we have a lot of opportunities over our lifetime to go through a lot of political wranglings in Washington. And it creates a lot of uncertainty in the markets. But I think the important thing that I try to remind you in the blog post is there is no such thing as a riskless investment. Every investment has risk. Even what we define as super safe government bonds have risk. They have interest rate risk potentially. They have inflation risk. Traditionally, we viewed that they have no default risk. And I think even today, the chances of there being any real default risk is really quite small. But the important thing to remember is there's no such thing as a riskless investment. All investments have risk. The key is what risk are we willing to bear to get return. And so what I want to encourage you to do is just think longer. This too shall pass. As a matter of fact, Bill Gross used to be called the bond king on financial journalism because he had a tremendous track record managing fixed income securities. And recently he recommended buying treasury bonds because he thought that there was virtually no chance that the U.S. government would actually default on its debt. So the important thing I think to remember is there's no such thing as a riskless investment. Therefore, we have broadly diversified portfolios. But most importantly, as this noise is going on, is that we have adequate liquidity. So don't have all of your liquid securities in government bonds. Have them broadly diversified. So I want to encourage you to keep liquidity available so that you can go through the noise. But the most important thing is to keep a broadly diversified portfolio and a long-term perspective. By having a broadly diversified portfolio and a long-term perspective, you get the benefits of compounding, and so that you can ignore this noise. So for instance, as I mentioned, this 285% appreciation you would have received since the last budget impasse was because you allowed the markets to compensate you. You know, I read recently, and I looked it up, 99% of Warren Buffett's net worth was accumulated after he was 65 years old. So again, patience and taking the long view. Please give me a call if you have any questions or want to chat about this. Again, there's a lot of noise and a lot of uncertainty, but again, the most important words in investing is this too shall pass. Thanks for listening.